what was your moment of insight when you knew that FTWZ can change the global trade game in India?
So this policy has been introduced in 2006. Before that, also people used to import, but there are lots of problems the trade is facing.
So that means foreign companies do not have an option to use a custom bonded warehouse.
No, consent will be an Indian company. When overseas company is sending the material, they are sending the material in their own name. They don't have any legal entity in India, so they cannot send the material to India without having a consent. Here, the free zone comes in the picture.
And I'm pretty sure when these delays are happening, they might often lead to circumstances such as rising of detention and demurrage charges.
Yes, huge.
48 hours seems to be a very committed time. I mean, how do you prepare yourself?
So before getting the material in the warehouse, we do compliance check of each and every of the document well in advance.
And it's been a common theory that India keeps on renegotiating and signing new free trade agreements with various countries. How does that affect the supply chain?
See, free trade agreement is something different between the FTWZ business.
I mean, there might be many foreign companies who would want to utilize the Indian free trade warehousing zones.
The overseas suppliers can use this facility as a Asian hub or mother warehouse for Asia.
Would you say that companies are still making minute mistakes while planning their supply chain?
People will be making lots of mistakes while preparing the documents, which can normally delay the shipments at the port.
FTWZ seems to be like a safe haven for the cargo that is kept inside. So does that mean I require no insurance to store the cargo there?
The accident can happen anywhere, anytime.
Welcome back. In our previous episode, we discussed about the fundamentals of compliances in an FTWZ. What are the mistakes that importers usually make, the detention risk, and where the actual cost savings really begin. But in today's episode, we go deeper. We are joined again by Mr. E.S. Shankar, Director of Compliance and Regulatory at OSV FTWZs. Thank you so much, sir, for joining us today again.
Most welcome.
In our last session, we were swimming around shallow waters. Now it's time to get into the deep waters. Now, when I say deep waters, I'll be stating more specific terms, right? Which we, or you can say our research team came across while we were conducting our research for this session. Now, there is a term that goes by MOOWR. I think it's called mover.
Yes, it is
Right.
mover.
So what exactly is the difference between a mover scheme and an FTWZ when I talk about the compliance or operational point of view?
See, as far as the mover concerned, there is no comparison between mover and FTWZ. These are two separate terminology. Mover is basically for a manufacturing under bond, custom bond.
Okay.
So mover, see, as far as the custom bond means, there are two ways. One is import and put the material for temporary duty deferment. That is custom bond warehouse, section 59. Okay, but mover is under section 65, where you can import the material without paying any duty and do manufacturing.
Without paying any duty?
Without paying any duty, and you can do manufacturing. And mover is pretty good. If you are comparing mover between 100% EOU, yes, there are some resemblance.
Okay.
But free trade warehousing zone and mover is totally different concepts. Free trade zone is mainly for import, keep the material for a certain time, maybe a longer period, release to DTA, domestic tariff area, or export it. While releasing to India, the importer need to pay the custom duty in free zone. As far as mover concerned, when you are importing any raw material, you do not need to pay the custom duty.
Okay.
When you have finished, you have converted the raw material into finished goods, FG, and selling it to domestic market, then you are bound to pay the custom duty for the certain material what you have used for converting to finished goods, imported goods used in finished goods. So those quantity need to be paid for the custom duty only for the quantity what you have used for the finished goods, not for the entire quantity. And if you are, when you are releasing the material to domestic tariff area, then only you are paying the custom duty only for that part GST is normally applicable for the complete product. Or if you are exporting that product, no duty to be paid.
Okay.
If you compare the same with 100% EOU, similarly, they are importing raw material. They are free to buy material from local also without paying any duty taxes. But 100% EOU, you have to export it. But in mover, you can release the goods to domestic tariff area also.
So just for my audience who are new to this and want to understand, what exactly is an EOU that you stated?
Yeah, 100% EOU is given. See, there are two type of export-oriented business having in India. One is 100% EOU, and the one is special economic zone.
Okay.
Special economic zone is a cluster of so many 100% EOUs or manufacturing facility. So that will be in a cluster, maybe having 100, 200, 500, 1,000 manufacturers sitting in the special economic zone, importing the material, converting to finished goods and exporting it. And all together they have a custom people are sitting over there, and commissionerate is also there or nearby. But in 100% EOU, you can convert your own building to a 100% EOU.
Is it?
Yeah, anywhere in India. Whether it is in Jammu and Kashmir or Kerala or Delhi, you can have it. But in free zone, that has to be in a dedicated place. Not free zone, the special economic zone. That
Okay.
has to be a dedicated place. But there are pros and cons. For 100% EOU, you have to follow all the DGFT rules as well as the custom rules as well as the special economic zone rules also.
Mm-hmm.
But in special economic zone, manufacturers need to follow only the special SEZ norms and policies, not the DGFT. Why I am saying this DGFT policies? Because if you are importing any material in 100% EOU, you have to export it back. But how do you prove that that has been exported, and how did you follow that the norms for converting the raw material to finished goods and everything? That will be, there is a book C on standard input output norms. As accordingly, they will accept it. But and if you have a wastage, you have to pay the duty in 100% EOU for the wastage while removing to a duty.
Okay.
In special economic zone, there is no limitation for any norms.
Mm-hmm.
In EOU, yes, it is. Okay. Here and in EOU, there is a specific time for import as well as export also. In special economic zone, that is not there.
Yes.
Altogether, different is the 100% this mover. There is no limit for import or export or release to DTA. It can be 1 year, it can be 2 year, it can be very same next day. And mover comes under customs, and 100% EU comes under DGFT as well as SEC, special economic zone.
So, what would you say? I mean, what would be your suggestion if somebody just wants to export? I mean, the conversation that we just had, you specifically mentioned for manufacturing. So, is manufacturing allowed in an FTWZ also?
No. In FTWZ, you can do the trading and warehousing only. You can do various things like value-added service, labeling, relabeling, kitting, packing, repacking, some sort of assembly, consolidation, deconsolidation. These are the things you can do it in the free trade zone. If you have imported two raw material, and convert it into another HSN code, third material, third product, then it is not, that is treated as manufacturing, which is not allowed in free trade.
So basically, that does mean that any HSN that is coming inside my free trade zone should be the same while it is leaving the free trade zone. Am I right?
Yes.
Okay. And then what would be, so in case of mover scheme, a person is allowed for, it's, if a person utilizes a mover scheme, then he is basically importing for exporting. Am I correct?
No. In mover scheme, people can, the domestic manufacturer can use this facility, and there are lots of leverage in mover, not like 100% EOU. In 100% EOU, you have to have a minimum capital of 1 crore or something, but in mover that is not required. And mover, you can set up any even bare land also.
Okay.
If you are importing in material, then you have to have a proper facility to keep the material safe custody, safe and good condition. Otherwise, not much requirement. You can earlier the trader cannot use this facility, or Indian manufacturer who are supplying the material to India don't have any such a facility to defer the custom duty. After introducing this mover, now they can import the material without paying any custom duty upfront, but the duty will be paid when they are releasing the finished goods into local market, only local market. When they are, if they are exporting it, no duty to be paid.
So does that, when you say that duty needs to be paid, so does that mean that usually the companies might be thinking that we can use FTWZ as a buffer to not pay GST? When does the GST applicability comes in?
Where? In mover?
In mover as well as in FTWZ?
See, while releasing the material to DTA, in both cases.
In both cases.
Both cases. See, free trade zone cannot be compared with mover. Mover is mainly for manufacturing. You have to convert the product to X to Y to Z or something. I mean, two product can be converted into third product. That is treated as a manufacturing. Okay, blending is also some sort of a manufacturing. But FTWC doesn't allow to do any manufacturing. Except manufacturing, everything can be done over there. Free trade zone is mainly for trading and warehousing purpose. You can import the material and you can do the trading as it is, which is not allowed into mover. Mover is not allowing you, officially allowing you for any manufacturing unless until you do some value added process, not the service.
Okay.
Okay, you have to convert something into that. In that case, mover can be available, mover facility can be availed, but free zone is basically for the trading and warehousing purpose. I'll give you an example. If you are a trader, see, you are roaming all over world and finding some product, bringing it to your country and offering to some buyers over here. Buyer is always looking for the manufacturer and supplier because they want to cut down the middleman. The buyer will be thinking that middleman is eating the maximum profit, and supplier is also similarly thinking that middleman is eating the maximum. If the middleman is not there, then I can earn more money, I can sell more product. Vice versa, importer is also thinking the same thing. That is not the actual fact. Yes, there may be some cases, but in that case, the trader are importing any material and supplying directly to the buyer. They will be some label, manufacturer label will be affixed on the carton, and their data will be easily passed on to your importer. So it is very easy to approach the importer to the supplier. If they are using the free trade zone, they can remove the label and they can put their own label on the product.
They can?
They can put their own label on the carton or product or anything.
Okay.
Except 4 things they cannot change. One is the manufacturing date, expiry date, country of origin, and the product.
Okay.
Except, I mean, they can put their own name. They can do the branding, imported and marketed by.
Okay.
The country of origin will be remain same. They cannot change the country of origin. And expiry and manufacturing date is there. That has to be there. They cannot change that. And the content, if they have imported anything, they cannot change the content.
But what if there is no country of origin mentioned? Can they add one on their own?
No.
No.
They cannot. They cannot. Okay. Because the no law allows you to change the country of origin. If you wanted to change the country of origin, you have to put some manufacturing activity. Minimum 35 to 40% value addition has to be there in terms of. Value addition doesn't mean that you can add value 40%, then you can have this facility. No.
Okay.
That need to be converted from, you have to change the HSN code. And in that also, there should be some 35 to 40% value addition.
Okay. So this we had this conversation from an importer's point of view. Now, if I shift the stage from an exporter's point of view, how would you say that it is staged based upon how an exporter can bring in the goods or consolidate and send the goods out into the global markets? Is it viable for them? Is an FTWZ viable for an exporter as well?
Yes, it is. See, in exporter means there are multiple type of exporters: manufacturer exporter, trader exporters.
Okay.
Okay, and the consolidator exporters. If I'm a buyer, say in a multinational company, Walmart are procuring the material from multiple countries, multiple suppliers from the same country and everything. So basically what they are doing, the exporters are exporting the shipments. They are filing the bill, shipping bill, and handing over the material to a forwarder. They are doing the consolidation. The same thing can be done at the free zone also. Buyer can get it registered in the free zone, and they can ask their exporters to export the material to the free zone, bill to Walmart USA, and ship to Walmart the free zone. The location may be Noida, maybe Chennai, maybe Mumbai. After getting this, they will get the payment directly from Walmart to India to fulfill their export obligation. After getting all the material from multiple suppliers, then they have the facility. I mean, the buyer has the facility to do the consolidation over here. Multiple product can be consolidated into one. This can be deconsolidated later, then send it to multiple countries. See, how do they do earlier? They used to import all the material to one country, do this all activities, then further exporting back to multiple countries. The same thing can be done in India itself. So this is the buyer perspective. Now the exporter perspective, if I'm importing in material under any advance authorization, any export obligation is there. Okay, and that is a time bound. If you are talking about advance authorization, that allows 18 months, the maximum. Due to whatever reason, some avoidable circumstances, you are not in a position to export the material within the stipulated time. In that case, you have to pay the interest and penalty plus custom duty to the government. Custom duty, of course, plus interest and penalty. In such a case, what they can do, they can export the material to free zone within the window. The buyer say, I don't want the material now, you have to keep it over there for consolidate with our material to save the logistic cost.
Okay.
But the government will not listen anything. In that case, they can export the material to free zone. Once it has been exported, any material supplies to SCC or free zone is treated export.
Export.
So they can fulfill their export obligation while supplying the material to free zone in the self name or the buyer's name.
Buyer's name.
It depends. That is one benefit. Second benefit, you have your buyer is overseas buyer are buying material from multiple countries. You can supply the material free zone. You can request them to do the consolidation over here.
Mm-hmm.
I said about Walmart case, there are lots of intentional buyers who are directly buying and supplying from there. Now they have converted the same to consolidate the material in the free zone and doing all the quality check at the free zone. Because most of the time what happened, when we are exporting material to USA, upon arrival over there, they are doing this quality check and rejecting some quantity or maybe 100% and coming back and their material back to India.
But then they have already paid the cost to take the goods.
Yes, yes. Now they are cutting down that. They are consolidating material at the free zone itself in their home country, manufacturing country, and doing this quality checking and sending back those rejected material or the entire material, whatever it will be, within a span of maybe 1 day, 2 day, 3 day, or 5 day maximum. Otherwise, they are waiting for 50 days, 60 days to reject it or accept it. Now is the full control of exporters also getting benefit out of importers are all the buyers, overseas buyers are also having the same benefit.
Interesting. That just goes to show that you are saving not just on a lot of time but also on a lot of cost, because cost that is originally going to take the goods from one place to the other, now you are just doing that at the origin point, right?
Yes, I'll give you one example how to save the time as well as the money. There is a customer in US, because US are having most of the brands owners are sitting over there in US.
Okay.
They are sourcing material from multiple countries. So we have came through one customer in that time. They are into pharma. They used to buy API, pharma raw material from India, China, like multiple 9 countries. So all the material need to go to USA. Then it will come back to India or China for contract manufacturing. So you can imagine about 40-45 days from India to China, India to USA, and back to India again 45 days, plus 5-10 days over there in USA itself for rerouting and cost. It is a temperature control product. So huge transportation cost, logistic cost, plus 100 days. So we have offered this same facility to our customer in Mumbai. We have converted our warehouse into cold storage. When you are doing any export by ocean, minimum 7 days it is required to catch a vessel, minimum. It can be for 12 days, it can be 15 days also. Because when you are sending a material from your factory, 1 day, 2 days, 3 days to reach to the port, then 1 to 2 days for custom clearance, and waiting for the vessel minimum 3 days. It can be within the window, or if it is out of the window, then next vessel, the weekly vessels. That means minimum 7 days need to catch a vessel to be on board. Vice versa, when the goods are reaching at the port also, they are taking same time 3 to 4 days for clearance and delivering to the warehouse. When we have offered this facility, the Indian manufacturer export the material built to USA, shipped to our facility within the night. So it was from Maharashtra. They send the material to our zone in Panvel, reach us in the midnight. Next day morning we have offloaded the material, and very next day they have filed the outbound bill of entry, and we have sent the material to Hyderabad for to the manufacturer.
Is it?
So within 3 days time the goods reached out. See, if you compare about 100 days to USA and coming back plus cost, so we have done this all this transaction within 3 days. 3 days from the facility, and it took 2 days, almost 5 days, the goods reached at Hyderabad. So this is the facility what the free zones are offering.
That's in fact a turnkey solution,
Turnkey solution, exactly.
right? And I'm pretty sure the people in US might have kept you in their prayers as well for
Of course, we
saving
have
a
a
lot
regular business.
for saving a lot much time and cost.
True.
That is true. Now, as you were saying about this model, it came to my mind that obviously there are a certain set of licenses also required. If I talk about any product, if I talk about food, FMCG goods, there might be FSI, or if I talk about certain other products, BIS is required, ADC, NOC is required. I mean, how does a free trade warehousing zone solve that? Are the companies operating well out of utilizing an FTWZ?
Not exactly. See, the most of the I mean, in India we have more than 1.4 billion population over here, but and in the business community are also very big, but very few people knows about the free zone concept and benefits. If you are importing anything directly, most of the product are controlled now. If you are importing a textile material, you have to have a TTC clearance, textile committee. They are going to check your hazardous azo dyes used into do color. If you are importing any electric items, BIS, electronic item, BIS plus multiple things, BIS, EPR, LMPC, WPC, a lot. Okay, so these are very cumbersome procedure to import anything. If you are importing any food product, then you have to go through FSI.
Yes.
So FSI means when the goods arrives at the port, you file the bill of entry and custom will demand for the FSI NOC. Then you have to upload all the document to the FSI. FSI will come and you have to pay the payment also, fees also. FSI will come and take the sample, and they will take it to their lab, and 3-4 days, maybe 5 days, 7 days, you will get a report. Till the time your goods will be landing over there, staying over there at the port, you will be paying for the charge. Maybe detention, maybe demurrage, maybe ground rent, maybe all together. Okay. So this is mandatory to do the clearance at the port. And if you move the same material to the custom ordered warehouse, you have to follow all these procedures, then only you can move to custom ordered warehouse. But in free zone, it's a virtual foreign territory, as I said. You can import the material directly to the free zone without having all these things. You offload the material because it can be exported, it can be released to DTA. This is applicable when you are filing a bill of entry to release the material to domestic tariff area. Then you have to do all this process like FSI, like ADC, animal quarantine, or BIS or anything.
Okay.
And there is no heavy detention demurrage because it is already offloaded the material. You are not paying any charges to the liner or any other one, only the warehousing charges which you have already agreed. So free zone is easing all these mandatory licensing process for the clearance. It doesn't mean that you can route the material to free zone and you are bypassing all this procedure. No, you are only easing the process and getting avoid to pay the heavy detention demurrage.
Okay. So that basically means that I would be required to have all these licenses whenever I'm bringing the goods into India, right? But what if I have a model of re-export? I do not intend to bring these goods into India. Am I safe from them?
Yes. When you are importing into India for export purpose, see, there are two words, re-export and export. Re-export normally uses for exporting the same material back to the supplier. Export means to any other country, any other buyer, or into same country but some other buyer. Okay. If you want to export the material to other country, then you have to declare the same for export purpose. Then you are free from all these certifications mandatory. This is called as CCR, custom compliance requirement, nothing is required. You can import, do the value addition if it is required, and export it anywhere in the world.
But what if somebody wants to know what actually is required at the time of import? I per se, if I take my example, I do not have the world's idea of what would be required if I'm importing any kind of food product. Fasai is something that is very common, but I do not have any other idea what would be required. How is there a particular way that anybody can know, or is it just your expertise?
Not exactly, but if you want, see, if you are importing anything personal, then you are not supposed to know all these things.
Okay.
Okay, but if you are into business, then it is your duty to understand all the mandatory requirements, the country's regulations before importing anything. Otherwise, we are sitting here to help you out.
Okay.
If you have any such a product, if you have any doubt, free to reach to us. We have a regulatory team over there. They will check and let you know what are the documentations are there.
Okay.
And if it is required, then we can connect you the right people to get the certifications.
So that being said, and that's being decided that if I utilize an OSV FTWZ, I'm free from detention and demurrage charges,
Yes.
right?
Yes.
And that is the commitment that OSV as a FTWZ company offers,
Yes.
right? That's great to hear. Actually, somebody is trying to take the charge, and somebody who's committing to me that you won't be facing all these abnormal charges. I mean, that usually gives me the amount of confidence that I want to have while importing anything inside the Indian territory, or even if I want to export. That is really good, sir. I truly applaud you for that. And having said that, I mean, I do understand that, as you said, that these would be required, these compliances would be required to be fulfilled whenever you are bringing the goods into the Indian territory. What if somebody requires any sort of help to arrange these licenses? Not everyone is very well aware of how to go about it. I'm pretty sure some businesses who are starting off or are in their initial stages, they also have the learning curve. Would you be helping them out too?
Yes, we do. In such a case, we strongly recommend before importing anything, please reach to us. We will guide you how to import the material and what are the mandatory certifications and who are the best person is helping to get you the license. Once you have imported, yes, it is free. You can keep the material in the free zone till you have this license. But yes, these are not a one-day job. Like if I talk about BAS, it is going to take 6 to 8 months.
6 to 8 months.
Yes, and there are lots of procedure to be followed. BS is being given to the manufacturer, not for the importer.
Okay.
Most of other licenses are to be obtained by the importer, but BS is to the manufacturer. So you have to have the manufacturer's permission, documents, and some government official will traveling to the factory to verify it. Then only you will get it.
Okay.
Earlier, the EPR also getting very fast, but now it is also going to take about 4 to 6 months time. EPR, that electronic product waste management, even plastic, you have to have the EPR for plastic waste management and something. See, it's a big subject to talk about. Okay, certifications. Every product need to have some sort of certification. If I told nothing required, okay, if it's a finished packaged product, then you have to have a LMPC certificate. It's mandatory. Legal methodology is issuing that certificate. That is mandatory. You have to have some. The label has to be there. First, you have to have a license. Then, accordingly, you have to paste the label. Nowadays, the government is very strict. Most of the departments are sending their agents or officers to the shops and taking each and every product and seeing the proper labels are there or not. If it is not there, they are sending the notice to the importer.
Okay.
So you before importing, you have to understand all this requirement. Otherwise, free zone is helping you to delay all this process till you get the license. Then you can take it into India.
I'm pretty
But
sure.
if you are directly importing, then you will be facing huge detention demurrage plus penalty also. If you import anything without having BAS, if the product is under BAS, then there is a big penalty.
Truly said, sir. And the government is very vigilant of what is actually coming inside the country. Every documentation needs to be order, every certification, every licenses need to be in order, right? So you are an industry veteran. You have been in this industry for quite some time now. So in your experience, since the time you have started off with OSV FTWZ, was there any company who specifically benefited out of, they didn't have any kind of licenses when they imported the goods, and they avoided heavy detention demurrage charges by utilizing an FTWZ? Do you have an example to share?
Yes, multiple examples I have, but I cannot take the company name over here.
Sure.
We are handling cosmetics a lot.
Okay.
Because if you want to import anything into India, the mandatory labeling is also to be there. If a international manufacturer is manufacturing any material, it is not a country-specific material they are manufacturing. They are manufacturing a generic product. Then the label has to be as per country's requirement, country-specific. So cosmetics, if you are importing cosmetics in India, the mandatory label as per cosmetic, SEDESCO and plus LMPC, all this you have to prepare the label all together or one or multiple, then you have to paste it. Without this, you cannot import at all in a normal practice. Sometimes what happen, they are having 20 items, 18 items they have the SEDESCO license, 2 items they doesn't have, but they have already applied it, it is going to get very soon. But if they have imported directly into a normal port, all the shipment will stuck over there. You cannot release if the 18 the product what is already there. It will stuck and you have to pay again detention name and everything. If you are importing the same in the free zone, you can release the 18 product what you have already have the license and wait for the license which is to be getting issued within soon. Or you can wait, you can apply a new license and wait till you have a license. We have helped multiple cosmetic customers who doesn't have the license, either applied or waiting for or yet to apply, got the material in free zone and applied the license, got the license, then they release the material to DTA. Not only in cosmetics, many electronic products also we have facilitated through our facility to import, kept it over there for some time to get the license and release back.
That was a great discussion that we had about the licensing that would be required and how an FTWZ can facilitate these movements. Now, I wanted to shift the focus on certain products. I was recently having a discussion with one of my friends who wanted to import a cargo that was specifically for exhibitions. Does FTWZ has a way to facilitate that as well? Is it how?
Yeah, when you are exporting or importing in material for exhibition purpose, so normally the people are taking, the exporters are taking ATA Carnet,
ATA Carnet.
CERNET. Yeah. So here in India, FICI is issuing the ATA Carnet. So to get the ATA Carnet, you have to give bank guarantee equivalent to the custom duty applicable to importing country. Okay, and they will issue the ATA Carnet to specific country, multiple countries. So if you are exporting the material over there, it won't be doing normal exports. It will be going a separate channel. There won't be any proper bill of entry will be filed like when we are importing material to India. The ATA Carnet is just like a passport for the cargo.
Is it?
And as I said that you have to give a bank guarantee for that. And you have to get the material within the specific time back to India.
Yes.
Or vice versa to that country. So if somebody is importing a material to India for exhibition purpose, that need to be re-exported within the time limit, there we can help them to export the material to the free zone in their name.
Okay.
And we will help to release the material without paying custom duty.
Without paying custom.
Without paying custom duty for 60 days.
Okay.
Yeah. So they can take the material to the exhibition center. They are free to take the material for demonstration to a particular place. If some HNI, I don't want to take any of the name, you can imagine, they will not come to the exhibition to see the product. So you have to take the product to their office or their house. There are products like high value watches, bags in crores and crores of rupees. Okay. So you cannot invite them to see the exhibition place, but you can take it to their home also. That we are allowed to take to, but you have to declare the place where you are taking it well in advance. So demonstration purpose, exhibition purpose, display purpose, you can take this goods for 60 days. If you have an office and you want to display the material over there for your esteemed customers, you can take it. And within 60 days, you have to send the material back to us. On 62nd day, again, you can take it back.
Is it? I can again take it
Again,
back
you can take
without paying any kind of duties?
Yeah, no duty.
Interesting.
Yeah, that is for importer. Now, somebody had already imported the material under ATA carnet, and they have to export the material within the stipulated time.
Yes.
But again, they may be having another exhibition in India. What do they do? So, what they can do, they can export the material to the free zone.
Is it?
Yeah.
Because
And they can take
ideally, what I understand is the normal situation would be they'll have to send it back to the country that
Country.
it came from,
Yes.
and then again import it
Yeah.
back to India.
Yeah.
I mean, there are again times lost.
So they can export the material to the free zone and take it back to India, or further export to other countries also. That is doable.
That is anywhere from anywhere to the world they can
They
do
can
it from the free
They
trade
can.
zone. That offers them a turnkey solution, because then again they are saving on a lot of time and cost.
It is.
So that definitely means that on the 59th or the 60th day, I have to return it back to
Yeah.
the free trade zone, right? If I don't,
Then you have to pay the duty, of course. Then the penalty also will be there. Custom gives more time, but we don't give, because we are keeping some cushion with us not to release, not to give that as more than 60 days to the customer, because we know if 1 or 2 days, if there, that we will accommodate that, but they have to get that material back. And there is a question: if you sell the material at the exhibition or display or something, then what you do?
yes.
Can you keep that material? No, you cannot. You have to get the material back to the zone and file a proper bill of entry, pay the duty, and take it out.
Okay.
Yeah, that is also doable, but you have to touch back that material back.
So a painting worth of crores of rupees can
yes.
be easily sent to an exhibition, then brought back.
Yes.
And then if needed, they can pay the duties. If it is sold, they can pay the duties and then bring it back into India.
Yes, that is doable.
That is doable. And you say that this is a turnkey solution over the previously followed ATA carnet.
Yeah. So yeah, in that case, you do not need to take any ATA carnet or giving bank guarantee and everything to the authorized channel over there, like in India FICI. That is not required. You can import in your name. Likewise, other imports. Then you can take it to the exhibition. And if you are exporting in other country, you do not need to follow any other things, because that has been exported from India.
I mean, this is one such category that we're talking about. If I venture in more into various categories, liquor is one such category that attracts a lot many compliances. Now, would you say an FTWZ has a way to cater to this particular category in terms of compliance, the operations and whatnot?
Yeah. In the initial discussion, I have already mentioned about liquor. Liquor is a sensitive product having highest duty of 150%. So traditionally, people used to import the material, sending into custom bonded warehouse. If you are able to liquidate the same within 90 days, then it's okay. But normally it won't happen. Some quantity will be living over there, left over there, due to whatever reason. For that quantity, you have to pay 15% interest on 150%. And FSI is also required. Sending the material to a customer warehouse, you have to do the FSI first. FSI NOC you have to take in advance. Then only you can send it to. Or you can go for apply for FSI NOC and take some provisional release, but you cannot sell the material. If you are importing to free zone, you can do the FSI upon release to DTA. And free zone is not only for DTA. If you have any duty free shop delivery, then FSI is not required. DFS. Okay. Then if you have any supply to your embassies and other things, you can directly send the material from free zone. No duty need to be paid.
No duty needs to be paid.
No duty needs to be paid to the embassy, to the duty free shop, or exporting, of course, no question will be asked. Why people are using customer warehouse? Not to pay the duty in advance. Once you have paid the duty, anyway you have to pay the duty, no doubt. But there are lots of, it's a control product, as I said. You have paid the duty, but you want to release the material to UP. Then the importer need to pay the VAT, applicable VAT in UP, then put the label, then only they can take it to the state. Likewise, all the states are having their own excise and the duties are also different, and they have to follow that procedure. The customer warehouse, they are doing it, but there is a time limit, 90 days, over and above, you have to pay interest, and most of the time people are paying interest. In the free zone, It is not landed in India, so no Indian rules need to be followed. It is out of customs as well as GST. So if you have any order from UP, you can put the label according to UP, pay the VAT in UP department, pay the custom duty and take it out. Similar other places also. And the FSI also can be done at the free trade zone warehouse itself. The officer will come and take the sample and you will get the report within 3 to 4 days. Likewise, other place. If you are importing through a normal channel, normal port, then all the sampling are being done at the port or ICD itself. So your container will be stuck over there for till you get the NOC from department, FSI department. So they have these uses over there, and consolidation is the main benefit. You have multiple product from multiple countries in the warehouse in Europe, and you have to send some product, consolidated product to a vendor. In custom ordered warehouse also you can do this, but you have to file multiple bill of entries. Here you can file only one bill of entry for multiple imports, multiple products.
Okay.
There you can save lots of money, custom clearance charges, and you can release to your customer. They can pay the duty and take it out.
So does that mean the duty-free shop I was at yesterday had certain liquor sent from your free trade zone?
Probably yes.
That's nice to hear. Now I do understand that OSV FTWZ is providing a turnkey solution to liquor importers, and that's just one category. Now we also discussed about exhibition cargo. Now other category that comes to my mind is project cargo or heavy machinery. Is there a way that OSV is helping importers who are into this category?
Yeah, we do. See, project cargo, yeah, heavy machinery means sometimes it can be second hand, sometimes it can be a new one. See, projects are coming for a particular project. So there can be a delay for the project to commission. So when you are importing it, or generally you have to move the material to the project for the commissioning over there. But if there is any delay, they can use the free zone. They can directly import and put it over there till the project is ready to move. If it is second-hand machinery, most of the time projects are coming second-hand because these are moving country to country. Then there are lots of procedure need to be followed. Evaluation, you have to take a chartered engineer certificate. And if you are dependent upon the port to get all these things cleared well before paying custom duty, anyway you have to pay the duty first, then only you have to follow all these things. By the time you will be paying huge detention, almost $100 to $150 per day per container. If it is heavy cargo, oversized cargo, then the charges will be pretty high. In that case, the free zone is the best place. Move the material immediately upon landing at the port. Then you do all the formalities later on, as and when. Saving, so free zone is not only for trading the material, but also saving a lots of procedures, delaying the procedure, time, as well as money also. For further export purpose, people are not only using for DTA. People are importing this, using the free trade zone for importing the material and for the further exports. So they are importing the heavy cargo over there and sending their engineer or technician to verify and do this cleaning and other for the value-added service and export it to the end country where the actual product is to be delivered. Free zone is not a warehouse; it's a zone having providing all type of facility. You can take the cold storage. We are having up to minus 20 degree, 2 to 8 degrees, 14 to 24 degrees warehouses, which is mainly used for the pharma items and delicate items, medical items, medical supplies. So, and even we have open yard where you can keep the heavy cargo. Heavy in the sense, multiple type of heavy cargos are there. Huge cargo which cannot be put into a warehouse. Okay, that you can keep outside. We have a warehouses where you can keep hazardous cargo, chemicals to keep over there, and ISO containers. Anyway, container cannot be put into a warehouse, so we have provided the open space to keep the ISO containers, and provided the roof also for that, so that it can be protected from the sunlight as well as the rainwater. And all type of facilities are there. So the free zone in India are catering all type of trade requirement, release back to India or export to other countries, or park the material for some time till the project is ready. I mean, as per your requirement, it can be moved.
So another question that pops into my mind is, I'm pretty sure, I mean, you're providing various types of storages, but how does the customer understand that this cargo needs to go to the free zone? I mean, for them, it's a general cargo that is arriving at the port. How do they make the differentiation?
Okay, see, as I said, free zone is also having a port code. Every ports are having a code. When you are importing, the code need to be mentioned at the bill of lading or everywhere.
Okay.
Accordingly, the customer is going to manifest that product, the container. Okay, if you are importing to Navasheva or Mundra, then there are lots of CFS are there.
Yes.
So CFS is also having a code. That code need to be mentioned, and it will be manifested for that code, that port. Yeah, CFS. If it is for Delhi, then it is being manifested for Delhi, and they are putting that material up to the rail yard for the Delhi bound. Delhi means ICD, Tughlakabad bound, Patpaduj bound separately. So free zone is also having a port status, putting the port code over there. It will be kept. You have two options. It can move to any CFS, or you can request the liner to keep the material at the port itself. Okay. If I am talking about the ocean port, then the free zones operator's responsibility to pick the container after submitting the bond to the port, the customs authority, move the material under custom board to the free zone. So it can be done on the same day or very next day. It will not go to any of the CFS. So we are moving the container from the port to the free trade zone, and upon getting the delivery order, we offload the material and release the container back.
Understood.
All the formality will be done later on, like FSI, ADC, all the things will be done later. When the port, otherwise you have to wait to do all these exercises at the port, attracting lots of duty, I mean, the detention and demurrage to the liner, to the operator, and everyone.
Okay.
Okay, and transportation is also under us. We pick the cargo and putting it in the zone. So customer is not worried about handling the material between the port to us, and the customs knows that the material must go to a free trade warehousing zone, and that's the reason this has been kept aside. And we will file the bill of entry in our warehouse. The message will be passed on to the port from electronically, and we will be taking, our people will be taking all the paper to verify it over there and move the material under board.
I'm pretty sure you said the customer will not be worried since you are handling the cargo, and I'm pretty sure the OSV guarantees me something in the market. But what about a foreign supplier who wants to send the goods into India, but then he's worried about his payments? Is there a way to secure his payments as well?
Yes, of course. See, when there are two ways. They can consign the material to an Indian buyer, as traditionally they do.
Yeah.
Okay, and if they are using our facility, then we are nowhere. But if they are sending the material in their name, so they will be exporting the material ABC USA. ABC USA is exporting the material to ABC USA, care of OSV FTWZ. The goods will be coming over here, and it will be kept under OSV warehouse, and OSV is the custodian, not the goods owner. So ownership is always lying with the supplier.
Okay.
Okay, the payment is 100% secured. Now they have a buyer. Buyer can come and inspect the material. They will make the payment as per their agreement. They can take the delivery, or they can sell this product to any buyer in India or any buyer in the world. They will be handling the payment directly. You are sending the payment, I mean, the buyer is sending the payment directly to their country, not to India.
Okay.
So this is 100% secured, and they are more safer than the traditional way of exporting the material without collecting the payment in advance. If the material is lying over there, if it is not saleable in India, they can take it back. Anytime they can take it back. No department is going to ask why you are taking this material back or why you are selling this material to this country. No question will be asked. And of course, the payment is not handled by OSV. That is directly between the buyer and seller. Product they can release to India or export it back. 100% under their control, and they can see the stocks also, and we are providing dashboard on daily basis. They can see the stock, and they can refill it, they can plan future planning and everything, and they can make up.
Yes, that is true. Having a dashboard does help me plan my inventory cycle as well. But you said that you are just the custodian of the goods. The ownership is never with you. I mean, the goods are kept in your warehouse. Doesn't that make you the owner of the goods?
See, first of all, before onboarding the customer,
Mm-hmm.
we are signing an agreement.
Okay.
In that, we clearly says what is our responsibility. We act on your behalf. And Indian government law, the license has been given to handle a third party product.
Okay.
See, the rule 18 by 5 says you can warehouse the material of foreign supplier and act on their instruction.
Okay.
They are not asking to import and keep the material. In that case, we will be treated as a trader. We are not doing that. We are providing the service to our customer, whether in Indian or overseas. So, SEC rule 18 by 5 clearly says you can provide services to a foreign supplier and act upon their request.
Hmm.
So that the policy is very clear about this.
Okay.
You are providing the service to a third party, whether it's an Indian customer or overseas customer, overseas supplier, customer, whoever.
So how do you see the FTWZ the FTWZ service growing in India? Do you say, yeah, can you say that it's going to be a huge thing in the near future?
Yeah, of course it is going to be, because FTWZ is not only providing this the gateway for importing or exporting, but providing more confidence to the exporter as well as importer. There are cases you are placing an order, say copper. Okay, if you are importing copper, you are placing the order to China or other country to supply copper pipes. The copper is being given on purity base like gold or silver. If the quality is not there, they are exporting the copper over here, copper pipe, but maybe inferior quality. Then what you do? Normal case, you will come to know about this quality after getting custom clearance and putting the material into a warehouse. Then you can fight with the customer. Customer will say, okay, send the material back, I'll replace it. By the time you have already paid the custom duty. And if you want to export the material back, there are provisions, but you won't get your 100% duty refunded. Duty drawback section 74 says you can export the material back anywhere in the world or back to supplier, and you are eligible to get a certain percent deduction if you export immediately. If there is a delay, then proportionately the percentage also will be deducted. Okay, and that's the risk. Anyway, the material will go back. If you are importing the material to the free zone, you can do this QC, quality checking, before doing custom clearance, either from your own company, or you can engage the inspection companies. They will come and take the sample and to give the report. If it is at par, then you pay the duty and take it out. So it's a safe first place for an importer to use the free trade zone. One, if you are placing the order to an unknown company to other country, you don't know the material is coming over here is right product or wrong product. Here we also cannot help them, but we can help them to avoid the custom duty, because once the material arrives at the free trade zone, then you can do this examination. If the product is right, then pay the duty, take it out. If not, then fight with your customer. We don't have any say. Similarly, the exporter is also having the same problem. They are exporting the material to India and you are not taking the delivery, then they are gone. If the payment is in advance, then they are safe.
Yeah.
Sometimes the payment is not in advance, 50% advance, 20% advance. Then after reaching the material over here, the importer will be saying lots of excuses not to clear the shipment, inferior quality, or they don't have money to pay it, some other sort. In that case, nobody can help them. The shipment will be there at the port under detention, heavy detention demurrage. After some time, it will go for auction. And importer will put some people over there to take the auction at the lowest cost also.
Yeah.
The supplier will be benefited if the material is coming in their name into the free zone. Genuine buyer can pay and take the delivery. Otherwise, they can take the material back to any other country and their own country. So, going forward, import cannot be reduced. Export also will be equivalent or more. The free zone is going to have a good option for importer as well as exporter, and I see there will be a huge opportunity in in the free zone.
Many importers are already utilizing the conventional warehousing methods. On the face of it, FTWZ is quite different. Can you point out 5 ways how an FTWZ can substitute these conventional warehousing methods?
Yes, first of all, you have to understand about the conventional warehouse.
Mhm.
Conventional warehouse means a building is not a warehouse. Building is a building.
Mhm.
If you are dumping in material over there, again, it's not a warehouse. Warehouse means there are multiple things. First of all, you have to have people to handle the product. You have to have handling equipment. You have to have electricity. You have to have water. You have to have cleaning. Okay, and you have to have software to handle that. I mean, it's an industry. Warehouse is an industry. So people are using, I'm not saying that everyone, but most people think that the conventional warehouse is my own. So why should I pay? Why should I use the free trade warehousing zone? Though the name is same, free trade warehousing zone as well as a warehouse, name is similar but totally different. Free zone is combined all the things what I have explained. Free zone is providing all type of handling, whether it is import or exports. We have a dedicated team to handle the product. We have a whole own WMS to handle all the stocks. And again, the conventional warehouse, you have a 25,000 square feet of warehouse, or you have taken a space, dedicated space, 10,000 square feet from some provider, but you will be using only 5,000 square feet over there. You are paying the entire charges for 25,000 rupees plus manpower and everything accordingly. Whether you use it or not, 100% use it or not, you are paying that. But in the free zone, you are paying as use and pay basis. The area what you have already occupied, you are paying that much of charges. The how much the labor you have used for to handle that product, you are paying for that. In the free trade zone, we are providing insurance, all the handling, all the value-added service. In the private warehouse, the conventional warehouse, what you are talking about, there you are engaging or outsourcing labors for doing value-added service like packing, repacking, labeling, relabeling, case-to-case basis. Otherwise, if you are putting dedicated people over there, that is also a big burden for you. Here, you are using only for the service what you have taken from the free trade warehousing zone. Over and above, when the conventional warehouse you are talking about, you are paying the custom duty upfront. I'll give you an example. If you are importing high value product, say a mobile, iPhone. Now the iPhone cost is about 1,150,000 rupees.
Yes. Even more than that.
Even more than that. Okay. So if you're the import cost will be almost 50%. If you're talking about 150,000 means 75,000 rupees will be the import cost. Say 30% custom duty. Almost, you make this calculation because I don't have that calculation in front of me, multiple into 10,000 pieces or 500 pieces. The pallet can be made of 500 pieces of mobile phone, because nowadays mobile phone is coming at this size of package. Altogether, the duty will be in crores.
Yes.
Okay, for one pallet I'm talking about. And the market rate of interest for the custom duty you have paid upfront will be 1% per equivalent to that will be in few thousand rupees. Whereas if you are using the free trade warehousing zone, one pallet will be costing you a peanut price. It won't be even in a decimal cost of the percentage. When you have imported, paid the custom duty and took it to a private warehouse, own operated or someone else, outsourced, that is also additional cost. So we are providing the facility at the free zone within the decimal percent of your savings on the import custom duty, plus is your bonus. Okay, so conventional warehouse and free zone, name sake similarity is there, but there is a big difference. You are deferring the custom duty till you don't take it to DTA, and you have an option to take it to DTA when you have an actual order, actual buyer. Otherwise, you have already paid the duty, then you are waiting for the buyer to pay these things. So here, you are keeping it and paying very nominal charges as a warehousing, complete protected with insurance and everything. And once you have a buyer, you have filed the bill of entry and took it out. This is very easy as well as viable for your business. And I suggest most of the valuable importers must think about or study at least about the free trade zone concept in India.
Well, sir, I am convinced that FTWZ is going to be a big boom in the near future. I mean, uh, thank you so much for sharing all your insights with us and helping us understand and navigate through the deep waters of compliance and regulatory of an FTWZ. Thank you so much for your time, and I'm pretty sure our listeners might have also enjoyed the experience. If you like this conversation, please do let us know. Hit the like button in the comments. Also, do let us know what do you want to hear next. We have more such insightful conversations coming up on our channel. Until then, goodbye.